There we go. Good morning, everybody. Welcome to Certipay's coffee break number 20. Can't believe we've been doing these so long already. Time flies. And I am here with Cindy Merkel from our HR team. She's our moderator this morning, and I am Rachel Camella, your host. Today we're going to be talking about pay classifications. Are you paying your employees correctly? This is one of my favorite topics because it's so important that we get this right. And so we're going to cover kind of all of the normal mistakes that people make and how you want to shift and get that in compliance. And this is one of those topics that does have a lot of math. So one of my favorites, and we're going to dig in. I would encourage you to ask questions as they come up. Go ahead and type them in the chat. Cindy's going to keep an eye on those, and we'll go back and answer all the questions when we get to the end, because I may answer your question as we go. So go ahead and type it in when you think of it, and then we're going to go back through those and make sure we get all your questions answered. All right. So let's go. Why are we having this conversation today? Well, first of all, 70 to 90% of the people out there, that's businesses, 70 to 90% of the businesses out there are doing it wrong. There are mistakes, there are issues. You've got risk and exposure in there. And the risk and exposure is huge. So what happens with this risk, and where's the issue for you? It's money. And what happens is somebody will complain. So somebody will say, I think I didn't get paid correctly, and they'll go to Wage and Hour or the Department of Labor, and they'll say, I think I didn't get paid right. This is what my pay was. This is how they paid me. What do you think? And the Department of Labor is going to say, okay, well, let's dig in a little bit. And so they're going to send the message to the company, and they're going to say, this person complained about their pay. Can you explain their job description to me? And then they're going to talk about their job description, and then the Department of Labor might say, it's not really an issue. It looks like you paid them correctly. We'll double check this one, but everybody go about their business. And let me tell you, that mostly doesn't happen. What mostly happens is they say, it sounds like you paid this office staff person as a salaried employee, but they should have been a non-exempt hourly employee. Based on the job description and the tasks they do, they should have been paid by the hour. And you didn't track their time, so you don't have any time sheets or time components to back it up. So now they're going to say, you know what, it does sound like there's an issue here. So we're going to be there on Friday to investigate. And then they're going to come in with a magnifying glass, and they're going to go through as much as they can. And they're going to say, you know what, we do have an issue here. Now we want to see all of your employees' files. We want job descriptions. We want timesheets. We want pay data. And then they're going to say, we want all of your terminated employees too. And we're going to go back 3 years. And next thing you know, you owe back wages to the tune of $100,000, and you owe fines and fees for every pay cycle that was out of compliance. So this is a big one. In 2016, United States companies paid over $260 million in back wages. These are huge numbers. You're not protected by employee headcount or these other places where you think you might have some protections. Pay is pay, and you have to have the classifications correct according to Wage and Hour and Department of Labor regulations. So after these painful audits, you owe a bunch of money, they head out, and then what do? They call other agencies. So they call Homeland Security and they say, hey, their files are a mess. You might want to go check it out. And then they call OSHA and they say, go check out the files. OSHA files are not even, I can't even find them. And then they call the IRS and they say, you might have some dollars on the table here. So when the first audit leaves, don't be surprised if a couple other agencies come in, because they're blinking dollar signs and they know you're out of compliance. So be very careful about this one, and let's get it right. Let's get you in compliance. Let's get you protected. How are we doing so far? Are you already afraid?
I don't know.
That slide.
That's a good
I know,
thing.
because everyone's on the floor. All right. So we want to talk about our exempt employees, which is kind of the place where we normally get in trouble. You're classifying somebody as exempt and they shouldn't be. And so we're going to spend a little bit of time talking about specifically what is and what isn't. Non-exempt employees, these are your hourly employees. I can tell you that the majority of the employees in this country should be classified as non-exempt hourly employees. So if you've got everybody at your company classified as exempt, you're probably not doing it correctly right there. So we'll break that down too. I've got commission sales in here because this is another place where we get in trouble. There are a few exceptions, but really the biggest thing here is that true commission sales are not the way they used to be. And we're going to talk about that too. And finally, we're going to really dig into 1099. What is, what isn't? Is this an employee? Is this an independent contractor? And if we don't cover everything within those, ask the questions and we'll hit it. Okay, starting with our exempt employees. The very first thing that must be in place is the minimum salary threshold. In order to classify somebody as a salaried employee, the very first question you ask is how much are they getting paid? $35,568. This is your number, $684 a week. If they're making anything less than this, the discussion is over. They are non-exempt hourly. So now if they meet this, first of all, you're paying them more than this. Okay, now we're going to take a look at the duties. And we used to have a little bit more information to break down and discover, but the way Wage and Hour really has said is you've got wages and duties, and that's what we're going to look at. Both have to be correct in order to be classified as exempt. So now we know we're over our minimum salary threshold, so let's take a look at duties. And this is where it gets tricky. So you've got the first three exemptions here, executive, administrative, professional. This is what typically happens when we're dealing with exempt employees. So, and within each of these categories, every single thing has to be present. So now with the executive, first you've got the salary threshold, and then if you're classifying as an executive, you manage at least 2 direct reports, and you're a decision maker. So these are your directors, your the people leading departments, your senior executives. These people, they're managing people, they're making decisions, they are instrumental in the forward direction of your company. Next, we have the administrative exemption. So they don't necessarily need to manage 2 people under this classification, but same thing, the salary threshold must be met, and then the primary duties are office in nature, meaning you're not out in the field somewhere, you're in your office doing the work, but it is directly related to the business operations. This person uses independent judgment. They have the authority to hire people, fire people. They are decision makers in the company. So this is the classification where I see quite a few errors, because you might think, well, I've got an office staff person, therefore they're exempt. But really they may not be. Just because they work in the office doesn't mean their duties fit this test, okay? So somebody who files papers or kind of manages the day-to-day paperwork, they do data entry, these kinds of tasks don't qualify under the duties test. We're talking about things connected to the business operations, independent judgment, decision-making. There's a difference between this kind of administrative level decision maker and administrative assistants or people who are doing filing. They're not making decisions. Their tasks and jobs are not related to the business operations. So be very careful here. This is where we see quite a bit of the issues. Next, we've got the professional exemption. So this one you're going to think of maybe a scientist or a high-level person who, again, works in the office environment, but they've got an advanced degree. They have intellectual experience. They had to have additional education to get to where they are. They exercise discretion and judgment, and they have advanced knowledge specific to what they're doing. So again, this would be, all of those things are in place. So these first three are kind of the core for the exempt status. And then we get into the area where people kind of push the envelope. So outside sales does have an exemption. So if somebody is an outside sales individual, they can be paid outside of the norm. Maybe they're a commission-only person, or they're paid in some other format, but they're not subject to overtime regulations or even minimum wage regulations. But here's the thing. We don't have outside sales anymore. In 2020, with technology, the way we do sales and the way we do business, outside sales is almost gone. So outside sales is actually the door-to-door salesman selling you a vacuum cleaner or a water softener system or something like that. Outside sales truly means they are not in the office doing any kind of sale. The Department of Labor has also defined people working from a specific location as part of the business location. So if somebody works from home as a salesperson for you, they are not outside sales. They are considered inside sales. If somebody works at a specific location, making calls, sending emails, doing any of those kinds of tasks connected to technology, they are not outside sales. The outside sales exemption is very specific to somebody who makes the sale at the client's location or in the home. If you're selling to the end user, you're in their home making the sale. If you're selling B2B, you're at their business making the sale. So again, in our culture, in 2020, the true outside salesperson is really non-existent. There may be some cases out there, but I would like to caution you not to consider your salespeople outside sales unless that applies. How we doing?
We're good. Keep going.
Okay, good. So next we have the computer exemption, and this one is for your programmers. These are for your systems analysts or programmers, your software engineers, the people writing the code. This is not the guy that goes from office to office and fixes somebody's computer issues. This is the programmer, the engineer. Again, you can kind of see a connection between the professional and the computer because these people have a higher level of knowledge and understanding and education. Before they got to this level, they had to take a long educational path to get there. So these people fit into the exempt status. Finally, we have our highly compensated category. This one is tricky. And so if you make over that threshold, so our highly comp threshold is now $107,432. So that doesn't automatically mean you're exempt. In addition to being over that threshold, you have to have one of the primary jobs from one of those first three categories. So if somebody is in the highly comp category for an executive, they would just have decision-making authority. If they had one of those pieces in one of those first three, plus the highly comp number, then it applies. Now, here's an issue I want to talk about. This has come up with COVID because we've had our threshold set for PPP forgiveness at $100,000. So some people have elected to just pay these people $100,000 for financial reasons and then have that PPP forgiveness. Here's the issue. When you're claiming the highly compensated exemption, that is the dollar amount that must be reached. So because these people may not qualify under one of the first three for full exemption, and the highly comp number is what's getting you there, if you only paid somebody $100,000 for the year, and they don't meet every single qualification in those other exempt categories, then you will have to pay them the difference to get up to that 107,432 number, or shift them to hourly and pay for all of their hours plus overtime throughout the year. So this is an issue that came up a couple weeks ago with one of our clients. So be mindful of that. If you're using the highly compensated exemption, that number matters. And if for any reason, let's just say somebody has a base salary of 80, and they normally would get the rest of that in commission dollars, but let's say this year they didn't make their commission numbers. And so now, because they aren't fully exempt in the other categories, and let's say their pay only reached $95,000, now you've got to go back and shore them up to 107,432, or switch to hourly and pay for all of their hours plus overtime. And again, you know, this is one of the issues we're seeing this year, because we're seeing people who would normally make that highly comp exemption, but they're not making their extra dollars this year. So pay attention to that number and know that there could be a shore up there or an hourly shift. How we doing, guys? Good? Okay. Yeah. So Wage and Hour put some guidance out in the last, in one of their last updates, and they said blue collar workers can never be classified in the exempt category. And so we know that in years past, if there was a blue collar worker who was paid high enough, they could have been classified as highly compensated, or you could figure out a way to put them in one of the other categories. And so these jobs are absolutely not possible to be considered exempt employees. And the list is long. I mean, it's construction and electricians, carpenters, mechanics, plumbers, craftsmen, any of these kinds of trades, construction workers, laborers. These people cannot be categorized as exempt employees. They will be non-exempt hourly. And there are some ways, we'll talk about some different ways to pay them, but they won't be considered exempt. So you can't just say, I've got a plumber and we pay him this much each year, and you know, that just, it doesn't work. It's an incorrect classification. These folks all need to be non-exempt hourly employees.
Rachel, that would not apply. That would not apply for their supervisors, though, correct?
Right. So supervisors, and it gets tricky. It's such a great point, Cindy. It gets really tricky here because you might have supervisors who actually do the work. So if the other things apply, you know, they are, you know, think of those executive, administrative, those categories. You're in the office environment and you're doing tasks directly connected to moving the business forward and business operations. Now, a supervisor in a blue-collar environment could be perceived that way unless they're actually doing the tasks as well. So a supervisor who just leads and makes decisions and manages the people would be considered a salaried exempt role if the salary threshold is met and every item is met on that page. If that particular supervisor is a working supervisor or technician doing the actual tasks, then it gets to be a situation where you really need to categorize them as non-exempt hourly. And I've seen some cases where people who work in say an individual store location where they actually do the same tasks as the people working in the location. Maybe they manage 2 people and they do other things and they want to pay these people a fixed salary. You can, but then you can make them salaried non-exempt. So you pay them a fixed 40-hour a week no matter what, but anytime they go over 40 hours, you still pay them time and a half. So there are ways to do that correctly without putting yourself in jeopardy. One of our myths is job title. And again, we've seen this quite a bit when we do some audits, is people say, well, no, that's the director of whatever, that's the manager of such and such. And just by giving them a title that sounds like they're a leader and a decision maker doesn't mean it's so. So like Cindy's example, you might have a supervisor who has the department manager or supervisor title, but they're actually doing the work as well, right alongside the other people doing the work. That individual would need to be a non-exempt hourly individual. So the title doesn't matter, it's the duties that matter. This is another one we've heard is my employee wants to be paid salary, and so we've paid them that way. This is a big mistake. That's not the way it goes. The Department of Labor and Wage and Hour, they don't care what your employee said. They care if you did it right or wrong. And so it's up to you to say, no, we have to get this in compliance. This is the way we're going to do it. And what happens is people feel like being paid a salary versus hourly would be considered an elevated position. So if somebody is paid on a salary basis and then you tell them, I'm sorry, we need to correct your classification, this is what it's going to look like, they might feel like they got demoted. So it's definitely an issue to handle carefully, but it's an important issue to fix and correct because your risk is huge there, and you want to make sure you minimize, close all those risk gaps and don't lose any money unnecessarily. And also I've had people say, well, we've got an agreement, and they sign an agreement that they know this is how we're going to pay them, and that doesn't matter. If you have somebody sign something that they're going to be paid and not be paid in compliance, then you're actually giving the Department of Labor ammunition to be used against you. So this is a bad idea. And so it is better practice, it is best practice to get everybody classified correctly, and then everybody's in the same category in that manner. And you're correct and you have no issues. How are we doing? Good?
Yep, keep going.
Okay. All right, so let's shift to non-exempt. This is the stuff, you guys know this stuff. This one's pretty simple. Your non-exempt employees must be paid for every hour they work. They must be paid minimum wage. A lot of states have different minimum wage numbers out there. The federal minimum wage, $7.25, hasn't changed for 15 years. But a lot of states have different numbers out there. So make sure you know your state's minimum wage. And then your hourly employees must be paid for every hour they work. They also must be paid time and a half for any hours considered overtime in your state. So some states are over 40 in a week. Some states like California are over 8 hours in a day and even double time on a 7th day. So be familiar with your state's rules and pay correctly within that. So going back to COVID issues, when we've got people working from home, you still have to pay correctly for the hours they work. So if somebody's at home and they're answering calls or they're doing emails and whatnot, make sure you have a correct way to track those hours and make sure you are paying for the hours that they're working. Just because they're at home doesn't mean you don't have to pay it. And when we talk about our salaried employees working from home as well, you want to make sure you are, when you have a conversation of what the work week looks like, what the work looks like in the week, and you don't deviate from what that salary is. So there are a couple of places where we have some specific deviations. And fact sheet 20, some of you may be familiar with, was originally set out to clarify kind of the commissioned salespeople in the retail industry. So think of an employee at a garment store in the mall. And that employee makes commission on anything they sell in the day. And then that's how their pay is structured from these. So the way this fact sheet works is there are some exceptions. So you can actually pay people commission only under this fact sheet 20 guidance. And again, let me tell you guys, this does not apply to most of you. There's a handful who can use this for some specific employees. It's not going to work for the majority. So the first thing that has to happen is it has to be a retail service establishment. So your money comes from selling goods or selling services. And more than 75% of your annual dollars have to come from this. And then every one of these points has to be present. So the employee is actually employed at that location. So let's say, for example, there's a parent company who sends an employee to a particular location to do some tasks. That employee would not qualify for this because they work for the parent company. They are not employed at that retail location. So the employee has to be employed at a retail or service location. Next is the rate. The rate is where it's tricky because it's not a base rate plus overtime. The rate for this one, and it's the minimum threshold, the rate is time and a half for all hours worked, and that's your minimum threshold. And so if somebody earns a bunch of commission, and the thing is, like, the people who do qualify for this, they typically make a lot of commission dollars, so meeting the threshold isn't the problem. What is the problem here? The problem is tracking the hours. So in this category, people say, oh, well, we pay those people commission only because they meet the guidelines for that, and so as a result, they don't track hours. You have to track the hours for these people. It is absolutely critical because if you don't track the hours, you can't prove that you paid them correctly. So that is the biggest flaw in this and the biggest mistake that we see. And if you add in a timekeeping component for those individuals where you can say, we know they worked 55 hours, this is the minimum threshold has been met, this is the hourly grid, then you can prove what happened. If you can't prove what happened, then you're in this scenario where they're going to create a timesheet for you, and if you aren't over the minimum, you've got issues. So if you know that you qualify for this, make sure these individuals are tracking hours. The other thing is more than half of the earnings have to come from these commission dollars. So if all of these things are present, you might be able to use this commission-only format. Another mistake I see here is that we'll have technicians who sell. And you know who you are out there, my plumbers and electricians. So you might have a commission who is a commission hybrid technician who is out there and he actually sells the job that he does. These folks don't qualify. Those folks are non-exempt hourly employees. So be very, very careful about that. If your technician sells, he's still a technician. And if he sells, that's awesome. The commission dollars are great. We're going to talk about how to add that into the pay structure. Are we good? Are you guys still with me? Is anybody on the floor crying? All right. So here's some of the issues. First of all, the commission pay, commission only pay, think outside sales only. And if they're not doing true outside sales, think twice. Then if you think you can still do commission, think in terms of that fact sheet 20 and the guidance there before you do commission only. So be very careful about using this kind of pay structure because it's typically a very small percentage of people that qualify there. So a fluctuating rate. This is what I talked about with our technicians who sell, or for anybody who has different kinds of rates for different tasks they do. You're allowed to do that. Again, you've got these people classified as non-exempt hourly employees, but maybe you pay them one rate for fixing something, a different rate for drive time, a different They get a commission bonus or bump for selling something. So then you take all of these rates, add them together and get an average. So you total the money earned, total the hours worked in the week. Now this is your effective hourly rate for the pay period, and it's probably going to change every single pay period, and that's okay, as long as you're above the minimum wage. And then what you do is you use that effective hourly rate to figure out how much you should pay for overtime. And as long as you're paying the time and a half overtime rate based on all of the earnings, then you're safe. So again, it's okay to have that. And so I know this is a more complex kind of pay, so you really want to have a nice payroll platform that can manage all of that for you. So hashtag CertiPay. If you don't have something in there, reach out to us and see if there's something we can do to help you to make sure. These are tricky kinds of pay things to manage. Piece rate. Piece rate is another great way. So they don't have an hourly rate, but they have a rate for everything they do. So if you take care of this, it's $500. If you take care of this, it's $250. If you do this over here, it's $700. And then at the end of the pay cycle, same thing. These are non-exempt hourly employees, but you can pay piece rate. And what you do is similar to the fluctuating hourly rate, because it's going to look different all the time. Add up all the money that they earned, add up all the hours they work, and get an effective hourly rate for the pay cycle. And then pay the overtime correctly on that number. Whoops. So when you talk about those overtime calculations, you put everything in there. Bonus dollars go in there, commission dollars, spiffs, if you're doing a true spiff, I don't know, any of those extra dollars, they need to go in that overtime calculation number. But you could have bonuses paid out that are discretionary as well. So the difference, non-discretionary bonus is tied to something. So it's tied to the quarter earnings, it's tied to performance, it's tied to earning numbers or percentages or something. The non-discretionary bonus is tied to something. So if this happens, then this bonus happens. The discretionary bonus is, I felt like it. Everybody gets a $200 bonus because it's the end of December. Or everybody gets an extra bonus this year because I think everybody's working really hard, or whatever it is. So a discretionary bonus is just random at the discretion of leadership. But if it's non-discretionary, those are the dollars you need to make sure you add into your overtime calculations. To clarify, that discretionary bonus, it's still considered wages. It still has to go through your normal pay process. You still have to pay taxes. It's still normal wages. You just don't have to use it to calculate overtime. Are we good on all the exempt and non-exempt? We've all learned a ton. Cindy, do I still have you?
Yes, I'm still here.
Are you on the floor?
I'm confused myself now. Just kidding. Keep going.
You got this. Anybody on this call, if you don't have it, you have us. So don't worry. All right. So independent contractor, again, one of the misused classifications that we see frequently. And we used to have this 20-factor test, which I think just confused everybody. And they still kind of use a 20-factor test as a guideline, but what they did is they dumped everything into these three general categories: behavior, financial, relationship, to make it a little bit easier. But the 20-factor test is included in these three. And so what does this look like? So behavior control, here's what we're talking about. Do you ask them to wear your uniform? Do you schedule their time? Do they follow your handbook? Do you direct their tasks? Do you dictate how the work is done? Or is it the other way around? They have their own uniform that they wear. They give you their schedule of when they're available. They give you a report of what they've completed. So the behavior is important here. If you're dictating what they do, they're probably your employee. Okay, financial. How are they paid? Are you paying them weekly with your pay cycle, biweekly with your pay cycle, or do they drive your truck? Do they have your tools? These financial pieces are another big clue. If they have their own truck, they have their own tools. Typically with a true independent contractor, they actually bill you. So they're going to send you by the job is complete. They're going to send you a bill. Here's how much this job costs. You pay the bill as a vendor. Or maybe they send you a monthly bill based on hours worked toward the completion of a particular project. But if you're paying this individual with your normal pay cycle with the rest of your employees, you might want to question that. And finally, the relationship. Is there any kind of sense of permanency? Do you pay vacation or other benefits? And the biggest question here is, do they only work for you? Does a true independent contractor offer services to other companies as well, the same service? So if they are working for you and there's a sense of longevity or permanency, they're probably your employee. And the other big question here is, do you have other employees doing the same job? So these 3 are considered independent contractors and these 4 are considered employees, but they all do the same job. You have an issue there. They are your employees. So be very careful. The issue with having this one misclassified, again, is taxes. So you're not paying any employment taxes, Social Security, Medicare. And then what happens? They tell 2 friends. So they're going to call OSHA. You may not be following proper OSHA guidelines. There may be workers' compensation issues where you've got these people categorized as independent contractors, so you don't have them covered on your work comp. And this is going to be an issue. The IRS will always put the burden on you. These people are going to be presumed as your employee. The burden of proof is on you to say, no, they're an independent contractor, and here's why. So make sure you take a close look at that. One of the things we see, #myroofers out there, is that you've got a blend. You've got some people that are called your employees, and you've got some people that are called independent contractors, but they all do the same thing. If you've got somebody wearing your shirt, driving your truck, following your schedule, then pull them in, put them on your payroll, they're your employee. The risk is much greater than the cost to make them your employee.
Hey, Rachel.
Yeah.
Just while we're there, excuse me, it came up about Upwork, which is a type of freelance work. How is a freelancer considered an independent contractor?
So it goes to the same thing. It depends on the tasks and what they're doing. So if somebody is a freelancer, and again, think about all of these pieces, behavior, financial, and relationship. Are they just doing one project for you? Do you just need them because you need them to dig around the back of your building and redo the landscaping? They're going to do the project, bill you for the project, and then they're out of your life. Then that's probably an independent contractor. But if this is somebody who, is doing things for you on a regular basis and following your company guidelines, you give them the schedule, you tell them when to be where, then this is an employee. So temp employees are employees. Just because they're, you may not have them for 5 years doesn't mean they're not employees. So be very careful about this. Did I answer that?
Yeah, yes, I do believe you answered Karen's question. Upwork is an association that connects freelancers with work. So I view that as almost a
kind of a temp agency.
Yes, correct. Thank you.
So if they are connected via the app, like the Upwork app, then they're only connecting people to be hired at companies. Or if they're connected for individual projects, like let's say a company does not have a specific type of employee and they need a task done, one individual project or job, they could hire an independent contractor to do that task and then be done.
Karen, if we didn't answer your question, you can just type more in the box and I'll get back to you at the end.
And I'll happily keep talking. As usual. Okay.
I wanted to just let you know on the Upwork worker, the reason I asked that is we have employees, of course, because we're with CertiPay, and there's one Upwork worker out of Georgia, and I just received a notice that she's claiming unemployment insurance. She's still an Upwork worker for us, and she's been doing these tasks for months. So I'm like, uh-oh, what if she can do this? But I don't understand. So that's why I wanted to see if there's any kind of, we thought we were safe hiring Upwork contractors, that they wouldn't be considered an employee at all.
So is Upwork an agency that sends you people, or do they just connect you and you work directly with the individual person?
We pay them through Upwork, through the website.
Okay.
So
then they're connected. So she's an employee of Upwork.
Okay, thank you.
So you're paying her like, you pay Upwork.
Yes.
And Upwork pays her.
Yes.
Yeah, so she's an employee of Upwork.
Perfect, thank you.
And you use Upwork to fill that role.
Yes.
And you need to decline that. She needs to claim under Upwork, not under you for the unemployment.
Perfect.
That's right.
I don't know why, but since I received a letter, we have to respond regardless if it's a mix-up or anything, because the Department of Labor is sending us a letter and said you need to respond by. But I wanted to just, find that out. And perfect timing when this coffee break came up, and I appreciate your time.
Perfect. Good. Great question. Thanks, Karen. Mm-hmm. Okay. So what if you have it wrong or had it wrong? What do you do? First things first, fix it. That's it. Good faith effort goes a long way. I tell everybody this with the I-9 audit, with the DOL, with wage and hour. If you are trying and you're doing everything you can to get it right, then it really makes a difference for you in terms of fines and fees. And if you know you're doing it wrong and don't fix it, that's when you're going to get slammed by huge fees, and they're not willing to back down on that. And now that you guys are all sitting on this webinar, you do know, so sorry about that. I saw that. See no evil, hear no evil. So go ahead and fix it. Now, please get help. This is confusing. It can be complex. There can be, words in the job description that you're not sure of, and maybe you need all your job descriptions redone. There are some excellent HR experts out there, #CertiPay, who can really help you with an FLSA audit, with new job descriptions, really taking a look at your classifications. Let's make sure you have this right. We know that 70 to 90% of you on this call have mistakes, and it's not your fault. It's just confusing, and we want to help you. We want to get this right, and so we're absolutely here for you. That is what we do best. Wages are wages. When you owe back wages, that's carved in stone. We recently, this last year, we helped somebody out in Arizona, and he had people that he was paying cash, and this one wanted to be called a salaried employee. This one wanted cash for overtime, and he thought he was doing the right thing by helping them out so that he could reduce their taxes. Well, he had a very painful audit, and he owed back about $106,000 in back wages. So the wages are carved in stone. If you owe somebody money for the work they did, for the hours they worked, you can't change the number. You owe that. The fines and fees, sometimes you can negotiate a little bit lower and get some break on, especially if you've been trying and you're trying to fix it, you can get those negotiated. But that particular client owed close to $30,000 in fees and fines. And the thing with the back wages is you have 30 days to pay. So you want to make sure you get this stuff right so that you don't end up in that boat. All right, final thoughts, guys. Get help with this one. We are here for you. We can take a look at that stuff and help you get through it. If you don't get help from us, get help somewhere, because this stuff requires some expertise. You want to get it right. You have huge risk and exposure that will cost you a lot of money. So get it right, get it cleaned up, get yourself in compliance. It's just not worth the risk. If you've got this exposure out there, it's just this underlying current of risk that you don't know when it's going to come get you. It's not a matter of if, it's a matter of when. So let's get this stuff fixed for you and get you in compliance. Any questions?
I do have a couple, Rachel. Sheree asked if the contractor signs a contract for a year job, is that okay? I did ask her to let me know how this person's being billed. That's my biggest question back to you is how is this contractor being billed? Is he billing you? Right. Are you paying on your normal pay cycle? So Sheree, can you let me know how you're paying this person? And while I wait on her, the other one was, how do we get in contact with CertiPay HR? Do we go through support or there's a different avenue? There's a couple ways you can get a hold of us. You can go through the HR email address, and we can see what's going on and go from there. Rachel, you want to talk to that?
Yeah, Linda, that email that you see on the screen right now, you can just go ahead and send us a message, and we'll reach out to you and help you out. And Charisse, like Cindy said, it kind of depends on some more information. You know, like, do you have other contractors doing the exact same job? Do you have employees doing the same job? Are they truly, you know, the first question is, are they truly an independent contractor? And if you have an agreement for a project that takes a year and they're truly, you know, all those things apply. Basically, they bill you for the work. They, you know, maybe they do work for other people as well. But if you're thinking that the contract means it's not an employee, that's not always the case. So let's get some clarification there and then get you the correct answer. So yeah, there are a lot of different things.
Rachel, he bills them every 2 weeks. No employee is doing the same job. The project will take a year, and they agreed on the payment for the project.
Yeah, it sounds like it's an independent contractor. It sounds like you're good there based on that. All right, guys, any other questions? Cindy, anything else?
No, I didn't have any other questions. I just wanted to bring around full circle and come back to your very first slide and, you know, be mindful of what Rachel said. 70 to 90% of us are paying our employees incorrectly. So it might be a good time getting close to the end of the year. There's a lot going on with taxes and the COVID pays, and it's just a crazy time. There's no reason to have anybody dipping into your information than they're already going to come the end of the year. It might be a good time to stop and let's take a look at job descriptions. That's the first place to start.
Yep. Excellent. Thanks, Cindy. All right, guys, thank you so much. Yes, go ahead.
I just want to answer Laura's question. Laura, you would always take the higher of the minimum wage. If your city that you're in has a higher minimum wage than your state and you're utilizing that to base the salary, go with the higher.
Yes. Yep. You are correct. Whatever the highest minimum rate is for your state, that's what you go with. Anytime. All right, guys, thank you so much. We love having you with us on Thursday mornings for coffee. Oh, and I forgot to talk about my coffee. I have it right here. It is an Americano from Temple, and I love it. And I know Cindy has double espresso. What do you have?
Dark roast with 2 shots of espresso.
A dark roast, 2 shots Americano. Yum! All right, guys, CertaPay is so thankful to be your business partner. And if we aren't your business partner, we want to be. So please reach out to us. We are here for you. And we thank you for your time. We thank you for your energy. And we thank you for tuning in with us every Thursday.